Okay, so just doing a quick marginal costing video linked to question A2 June 2021, paper 2, 15.2. So if you're completing a marginal costing question, the key thing you've got to think about, marginal costing focuses on variable cost. So it's the cost of one additional unit. So the top half of the income statement, you're going to have your revenue, less all your variable costs, and you're going to have contribution. So contribution is a key element of an income statement if it's marginal costing, so sometimes students forget that and lose a mark. And then you've got all your fixed costs deducted from your contribution to give you a profit for the year, profit for the period, whatever it might be. So this particular question is a 9-mark question on marginal costing. And so the key things, like I say, is to determine which costs are fixed or variable and how much they'll be. So the question is for factory B, and if they produce and sell 2,000 units. So automatically, if they're producing and selling the same amount, we don't need to worry about inventory. But just to clarify, if you did have any inventory on a marginal costing basis, you'd have to work out the variable cost per unit and multiply the closing or opening inventory by that figure. So we're looking at factory B. This particular question would have had something on factory A in 15.1 or 15.3, but we're not worried about that. So if we just highlight these areas, so 2,000 is the capacity, 2,000 is what we're producing and selling. We've got an annual factory rent of 42,000, so that'll be a fixed cost because rent is a fixed cost, doesn't change in line with output. We've got an annual factory manager's salary of 27,295, so that's another fixed cost we need to remember. And we've got 5 members of factory staff. That'll become important in a moment. The selling price for the washing machines will be £750 each in factory A. Due to economies of scale, the selling price produced in B will be 10% lower. So obviously they're producing 550 more units than factory A, which hence means they're producing larger volumes. So we'll take 10% off that. So working out the new selling price will be £675, will be one method mark. So if you've got your workings, you still need to do your workings to get it further in the figure. So you need to go 750 times 0.9, whichever way you would reduce it by 10%, and you would gain that. Mark, royalties must be paid at a rate of £15.40 per machine. Now that is per machine, so that's going to be one of the variable costs to include the top half of the income statement. Factory staff are paid, it's getting everywhere there. Factory staff paid a monthly salary of 1,475 salary, so therefore it's a fixed cost. So it's monthly. We're doing an annual income statement, so we have to times the 1,475 by 12, then by the number of factory staff, which is 5. That will give you a fixed salary cost for the factory staff. Each completed machine incurs an additional labour cost of £20. Because that is per machine, that is a direct cost or a variable cost, so therefore it will be on the top half of the income statement. Materials are higher quality and are likely to cost 40% more. Current costs are £177.40 per washing machine. So again, working out the additional 40%, which will get you to £248.36. You're going to get a mark for doing that. It's how we then put all that together and put it into an income statement. This is quite a nice question, as long as you know the differential between the fixed and variable costs. Okay, so here we got a mark scheme for this particular question. So what we have firstly, we've got a revenue figure of 1,350,000, 2 marks. Like we said on the at the beginning, with the 10% decrease is 675 multiplied by the 2,000 units, that gives you 1,350,000. Now if you've not got the 675 right, you can still gain a mark, but obviously not too bad to get 2 marks that. Materials 496,720. I mean, really, you've got to get that 40% right, the 248.36, then multiplied by the correct amount of units. It wasn't really given any own figure here, so it's get that figure right or not. If it's not included in the income statement, you won't get it. Then you had the labour, so the £20 per washing machine for 2,000 units gives you the £40,000, and then the royalties were £15.40 per washing machine. So if you've got those figures included, you're going to get a mark each, and we're already up. So highlight W4. We're already up to 5 marks. I don't think we've really done a huge amount of work. You've got to include contribution, as I previously said. It doesn't say on the mark scheme, but I think it's highly unlikely that if you included any fixed costs prior to the calculation of contribution that you'd gain this mark. It is revenue, take variable costs as contribution, but it is own figure. So if you got one of the figures wrong, or if you missed one, you can still get the contribution mark. In your fixed costs, you're going to get 1 mark for including rent of 42,000 and salaries of 27,295. No calculations needed, so it's quite nice they give you that mark, to be honest. Factory staff salaries 88,500 is another mark. It's just the fact we're paying 1,475 per month. So you obviously got times by 12, times by 5 gives you the 88,500. And finally, the profit is own figure 624,685. If you don't include that, that's just odd, but sometimes people don't. They just don't finish the income statement. Always finish it. Unless you've got any alien items, you're going to get an own figure on profit. What we've also got is a different presentation. So you could present it in the contribution way. So we've already really said how we're going to work out the 675 and then 248.36, but you could then use that to work out the contribution per unit or CPU of £391.24. So if you look at this presentation, you're going to get 4 marks for getting down to the 391.24, and then multiplying that by the 2,000 units gives you the same contribution, 782,480, than you got above. So you can still gain all those marks, just in a slightly different presentation. What you would then do, so I'm just looking at how they presented this. 2, 3, 4, 5. So they're given 4 marks for contribution, 1 mark there, 5, 4, 5, 6, 7, 8. Interestingly, that is missing a mark. So you would have got more mark for part of your workings, I would assume. 2, 3, 4, 5, 6 contribution. I think they're missing a mark there. It's because you're multiplying it by the 2,000. Where revenue not shown, apologies. Okay, that's the bit. That's me not reading the mark scheme properly. So if they don't show revenue, you're only going to get 8 marks. So you're not going to get it. Hands up, didn't notice that. So just really use revenue at the top of an income statement, but I'm sure a lot of you know that. And we still got the fixed costs and we still got the profit at the end. So really what we're looking at here is a presentation, making sure you've got revenue, making sure you've got contribution, making sure you can distinguish between the variable and the fixed costs, all clearly labelled as it says in the marker note, and you'll get your 9 marks. Nice and quick with marginal costing. Like I said earlier, if you have inventory is valued at variable cost per unit, so you would have worked out how much it is per unit, multiplied that by the amount of units left and gone from there, but this particular one has not included that. Okay, good luck with your costing methods.